Hello everyone, welcome back. Welcome to our new trading session number 3. We're going to be trading our inflation numbers here tonight. Obviously, it is going to be a very interesting night with how the development was from last Friday with the NFP numbers. But yeah, let's do a quick sound check. Let me know if everything is coming through okay. Should be coming through okay from my side at least. But if you are having issues, do let the team know. We can try and fix that for you. Okay, so good morning, good afternoon, good evening, wherever you are. We're going to be starting our inflation numbers tonight. My name is Vito Jodo. Let's get this through with a quick disclaimer. Any opinion discussed in this webinar or links to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable, which leads to high trading risks and delays in order execution. So be very attentive when determining the volume for transactions and consider all possible risk factors. Okay, so a little bit about myself. My name is Vito Jodo. I've been a full-time trader with over 20 years of experience. To be exact, I'll be 23 next month. Yeah, it's been a long time. 2 full decades there, seen a lot of things, right? I've been a professional trading coach and also a technical analyst since 2007. My expertise is in the Ichimoku Kinko technique, and I've also been invited as a guest speaker at Trading Investing Expo across Australia, Investment in Singapore, as well as the ATA and the APTA conferences, which is the Australian Technical Analysts Association. All right, as per usual, we're going to give you the bonus for participants tonight. It's going to be a promo code to double your deposit bonus. I'll show you that on the next slide, but some of you guys figured that out last Friday in terms of what the new code is. But for those that didn't attend last Friday, I'm going to show you the code, okay? And you should have access to the private Telegram channel if you have attended the previous sessions or registered through Octa's website. And you should receive that on your email. Okay, cool. This is the new code, non-farm 2025. We kind of figured that out last week, but yeah, as promised, we're going to get this. We're going to get this ready for 2025. Got a code there. Expiry date on the 31st of December 2025. So yeah, if you want to save it up, save it up. If you can still use the 24 number, use it first while it still works, okay? But this is the code to double your deposit bonus, okay? All right, so theories. Covering a few stuff on theories, but yeah, as per usual, I'm going to go through a little bit quicker here because we need to look at the context of what the inflation is, what is the potential shift that Trump could bring about in terms of inflation in the United States, what's causing the fear there and whatnot. Okay, but yeah, what is inflation? Put it simply, inflation is the rate at which prices for goods and services rise. Most commonly used inflation indices are the CPI numbers, which is going to be what it is tonight, as well as the core inflation number. We already had the PPI number yesterday, so we'll talk more about the PPI numbers as well in terms of what the number is. It was a little bit softer. For December, it is actually a pretty surprising number there. Are we going to be looking at the same thing happening tonight? We don't know, because typically PPI is not a leading indicator into what a CPI is, okay? But yeah, if you're trying to wrap around what inflation is, basically, to put it simply, if you hold cash from 20 years ago or 40 years ago, it means a lot less. Like, it doesn't have that much buying power. I think if you take a look at the stuff there, I was born in the 80s, that's how old I am. And we had our chance with Nintendo, right? So yeah, Nintendo back then doesn't cost a lot, but inflation adjusted, it actually costs a lot more than what it is right now. It's probably more expensive than the PlayStation 5 anyway. But yeah, that's inflation. The value that we have in terms of what we have, in terms of cash, it kind of just devalues every year as well. So the speed of which inflation goes up, it's actually not really good for us. It means that things are going to be a lot more expensive. I could grab a coffee maybe for about $1.50. Back when I started working in the office, I think we still go about $1.50, max about $2 right now in Sydney. If you want to get a coffee just downstairs on the lobby. It will probably cost me about $5.56 just for just a takeout coffee. So yeah, cost of stuff continues to go up, and that's basically inflation is basically the cause of it. Okay. All right, so CPI, that's Consumer Price Index. It is basically a critical indicator of pricing pressures in the economy, provides us with a gauge of inflation, and forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against the rivals in the market. Inflation target bands, and you can ask me why, but even Jerome Powell was not able to answer that, during hearing. But yeah, why? What the central bank across the globe basically kind of have their eyes fixed on a 2% inflation target. Why is it 2%? A lot of reasoning, a lot of things goes into it. I can explain it, but it'll probably take me a couple of hours to explain what it is. But yeah, to put it simply, I don't think this is actually a question that can actually be answered. Not even Jerome Powell can actually answer that. So yeah, CPI target band by a lot of central banks is basically between 2% to 3%. The U.S. inflation number, as it is, the core CPI is the CPI is actually at 2.7. The core is at 3.3%, so it's not quite there yet in terms of the target range. But the headline inflation number is actually within the range, 2.7. Anywhere that falls between 2% to 3%, that's actually the target band for inflation. So I think inflation is actually under control in the US. But why are we looking at this inflation number? Because the CPI measures your cost of living. As I said, things get costly every single year. Prices for stuff just continues to go up. Okay, and also CPI includes broad ranges of goods and services purchased with consumer. But typically, what we look at in terms of the basket to measure the CPI is actually basic necessities, right? So your soap, your shampoos, your butter, your oil, and all that kind of stuff, right? It also includes international personal consumption items. So if you buy something from overseas, you import it in, that goes into the CPI as well, right? Scope excludes changes in interest rates or costs. The PPI, which is the producer's price index, so CPI is how much we pay for it, right? PPI is how much it costs to produce. So it's producer's price index. And this one here measures real growth in output, includes items produced for personal consumption, does not include imports, encompasses services with prices including an interest rate component. And this is the reason why we look at the CPI number and the PPI number. Typically a PPI number is not that big of an impact. We look at the CPI prices a lot more. Okay, so when someone says you look at inflation, I basically look at the CPI. So, you might go to some economic calendars and they didn't write CPI, they actually write inflation. But they're basically the same thing, right? CPI, inflation, CPI is inflation. So if someone asks you, hey, what's the inflation? You always look at the CPI number and tell them, all right, this is the inflation rate, okay? So that's basically a little bit about the CPI and the PPI. So the next thing that we look at is actually the core inflation. So core inflation refers to the changes in price of goods and services, excluding those from the food and energy sectors. So we're excluding oil, we're excluding petrol, we're excluding gas prices. We're also excluding fresh produce because fresh produce tends to be more seasonal. They're actually considered perishables. They don't last long on the shelves. These are food that are going to be excluded from the core CPI. Right? The core CPI does still include non-perishables. For example, like if we take a look at canned products, they're still counted in towards the core CPI. But we're just excluding the fresh produce. Things can happen, right? Maybe seasonals, maybe there could be a long drought, maybe there's flooding, crops fail, maybe there's, I wouldn't call it locust attack. Maybe some part in Africa still experience that. I don't know, but yeah, things like that. All right, that could actually influence prices for fresh produce, and this is why we kind of take them out because they are more volatile. So we're excluding stuff that is actually volatile. Obviously oil, energy prices, gas prices, they are induced by a lot of other factors out there. So we want to take them out because any spikes on any of them could then, kind of push the core inflation out. So in essence, what is core inflation? Basically, it's CPI excluding the volatile stuff. So the CPI, for example, the inflation could shoot up really high, but if we measure the core inflation or the underlying inflation, it might show you a very different picture right now. Okay, so like for example, if you take a look at the core inflation, it's at 3.3%, right? Inflation is at 2.7%. Now you'll be scratching your head. Okay, but we're taking out the volatile prices. Why is inflation lower than core inflation? Well, because if you take away the volatility that was induced by these volatile prices, we might see inflation drop because energy prices have been dropping down really quickly. Okay, but if we measure it from the core inflation perspective, since we have taken away energy prices that was shooting up maybe 2 years ago, 3 years ago, for example, oil prices kind of shoot up really high. Except for last year, it was really bad last year in terms of oil prices. It was actually kind of low. So yeah, maybe before the rise and after the fall of oil prices, the core inflation actually doesn't change much. So this does point to a very different view of the U.S. economy. Now, the benchmark inflation that falls into that 2%, 3% target band by central banks, it's typically always a core inflation. Okay, traders look at the CPI numbers, but central banks, they look at a core inflation number because it does paint a much more accurate picture of what the inflation level is. Okay, all right. So what to expect from the CPI today? Yes, we'll talk through that once we are done with our theory part, which is right about now. Okay, so this is what we're expecting tonight. Okay, let's focus the one at the bottom first. Inflation rate year on year. This is your year on year CPI number. Previously we are at 2.7%. Consensus has now met forecast at 2.9%. So we do expect inflation to kind of bounce back up a little bit. But as long as it doesn't exceed 3%, I don't think it's actually going to be a shocker in the market. Okay, as long as it doesn't exceed 3%, okay, we should be fine, right? We don't expect a sudden shock in volatility like NFE's number last week. But we'll talk more about the potential scenarios here. Okay, but just reading out from the consensus here. Changes per month expected to be the same at 0.3%. We're expecting inflation to continue to go up 0.3% per month. Year-on-year rate from 2.7 to 2.9%. Core inflation year-on-year to remain at 3.3%. Core inflation changes per month. Last month, not last month. Previous number was actually released in December. That was for November. Number we're looking at today is actually for December number, okay? So in December, for the core inflation number, we're expecting it to grow by 0.2%. Okay, so this number means that things are actually added into inflation every month, all right? Because we are looking at the change of rate per month. Scenario number one, if it comes in as per expected, I don't think it's actually going to be a lot to trade. I don't think there's actually a lot to trade. It means that it has met whatever the market has priced in. Is it fully priced in? I don't think it's fully priced in. Okay, but if it does come in as per consensus, we might see a little bit of an uptick on inflation number. But it doesn't change much. Okay, it won't change anything. In fact, unless we saw an inflation number that shoot up maybe 3.1, 3.2%, market is still expecting potentially one cut from the FOMC in 2025. So yeah, if it comes in as per consensus, I don't think there's actually any cause of concern. That's number one. Core inflation, if it remains at 3.3%, also it doesn't change anything. Unless core inflation picks up to 3.5%, monthly rate grows by maybe 0.3, expected at 0.2 for the core. If it shows up 0.5, then yeah, it will cause a lot of concern that will actually send the dollar up. It will also send the dollar index up. It will send the VIX up. It will send gold up. Okay, so gold is not going to be in the same realm as all the other major currency crosses against the US dollar. Okay, and we have this example from last Friday. We went long on gold just before we wrap up the session, and I think everyone walks away happy on Friday night. There was a reason why we wanted to go long on gold, because the jump up on the NFP number, which is 100,000 above consensus, it should send the volatility index up. It should send the VIX up, and it should, it should cause a lot of concern for the market that, hey, what's going on here? Is inflation also going to pick up? Is the U.S. economy really that strong? A lot of that thoughts. Okay, it causes a lot of uncertainty. We saw a sell-off in the Euro USD. We saw the sell-off on the Pound USD. We saw the sell-off in the equity market last Friday, post NFP. Okay, so yeah. We actually faded gold. We also faded the US 30, but I think US 30 got stopped out on last Friday. Okay, but yeah, that's probably what could send the dollar up really significantly. So we've got scenario number one, everything as per consensus. We don't expect a lot of market movement. If inflation overshoots, inflation rate above 3%, core inflation comes in at 3.5%, core inflation rate changes per month grows by 0.5%, it would send the US dollar up. It would destabilize the market at this point in time. We saw risk sentiment coming back into the market. The market was risk positive for 2 days at least, since Monday. And we saw that follow up on Tuesday. The stock market was recovering. The Pound USD and the Euro USD, they recovered yesterday. I think it was a little bit of a risk appetite coming back into the market. The Australian dollar was recovering as well. So yeah, a lot of recoveries that we've seen. If the inflation number comes in higher, then yeah, market is just going to wipe that out, and they'll crush the euro, they'll crush the pound. It will send the dollar up flying. It will also send gold flying to the upside as well. So just keep that in mind. Gold, it's a little bit of a safe haven situation at this point in time. Okay, those are the two scenarios. Scenario number three, if we get inflation unchanged at 2.7%, or maybe even lower at 2.6%. Also, core inflation, if we saw core inflation dip to 3.1%, we're not talking about 3.2, I want to see 3.1. If we saw this combination here, then we're going to get risk appetite back into the market. We will see everything rally up. Cryptocurrency might be affected by that as well, because we are looking at a positive risk sentiment if that happens. Okay, so I think the thought here is that, okay, doesn't matter if FOMC is going to be cutting interest rate or are they going to be hiking interest rate. I think that's not the story right now. But yeah, if we get that lower number, then everyone's going to start thinking, okay, sure, at least we're still going to get one more cut. But as I said, if the inflation ticks up, everyone is just going to write off 2025 as that's it. The FOMC is not going to be on that rate cut cycle anymore. In fact, everyone is probably going to be talking about potential rate hike if we do see an offshoot in inflation tonight. Okay. Thanks everyone. Yeah, so that's bull stocks. That's basically what we're expecting for the CPI. In all honesty, I'm very happy if we get everything as per consensus. I do prefer a lower inflation number because I much prefer to see a return in risk sentiment. I don't really like to, just seasonally, right? January 2025 typically is kind of strong for the US dollar, at least for the first 20 days. But beyond that, we typically see a little bit of a weaker US dollar. So I want to fit in that scenario a lot more. Okay. Kung Si Fa Chai, happy prosperity burger. I think we were still about 2 weeks away from that, but thank you. And greetings from Bali, greetings back to you, and thanks for the support there. So anyway, the dollar be strong depends on the number itself. Okay, so we're looking at all this. I think the thought here is tonight, is the market going to change their mind about the FOMC? Are they going to be thinking, okay, one more cut, or everyone's just going to say, okay, that's it. If inflation goes up, labor market is strong, Trump is going to implement his tariff program, then yeah, it would be a view where the FOMC needs to be a little bit more on the cautious side. they might have to hike interest rates again in 2025. So I think that's the topic of the conversation. I don't think they will hike. At least they won't do anything for the first 3 to 4 months in 2025. They won't be doing anything. But yeah, you know how crazy the market is. You know, everyone is just speculating. Everyone is just pricing in stuff that probably doesn't even exist. Okay. All right. So let's go to our positioning. See what we can do here. You know, is there a potential for any straddles here? I think for the pound USD at least, you got a couple, right? You can look at the pound USD here. I think we're ahead, so we got about 8 minutes here. So there's one corridor of volatility on the pound USD here. This is on the hourly time frame though, so the range itself, it's actually a lot. We're talking about a lot here. This is 112 pips, right, in terms of range. So probably not actionable. So I want to go in a little bit on a smaller range, at least on the 15-minute time frame. Also, this one here, we had a little bit of a miss on the UK inflation today. UK inflation comes in a little bit lower. Let me just check that, just make sure everything is right. Yeah, market was expecting 2.6, unchanged. We got 2.5. Core inflation was down core inflation was down 0.3% on the UK inflation. But you can take a look at the scenario here. We had a little bit of a dip on the sterling here, but then it kind of recovers up. Why is that? You know, inflation was going down in the UK. Shouldn't that be bad for the US dollar? Technically not really, because everyone at this point in time is just expecting the Bank of England to start cutting interest rates a little bit more aggressively, and lower inflation plays into that favor. So it actually boosted the sterling there because of risk sentiment being a little bit more on the positive side. Okay, that's just a little bit tidbit in terms of how we look at the numbers. But yeah, 15 minutes on the pound USD, we are able to straddle this, and first buy stop is going to be at 1.22. I want to have it a little bit higher. I want to go 1.2245 for sterling. This is for sterling first. There's a lot to talk dollar CAD dollar Swiss. We're going to be taking our positions on that. And for the sell stop, we're going to be looking at 1.22, a little bit lower than 1.22, maybe about 1.2195, 5 pips range. Yeah, okay. Yeah, I'm happy with 1.2195. Okay, so let's take note of this. 1.2195 sell stop on the pound USD. Buy stop is going to be at 1.2245. Those are the positions on the pound USD. Euro USD, we can also straddle this. The range here, at least on the sell side, it's much more apparent here. We are going to be looking at 1.0285. That should be enough range. It should be enough, right? It's actually a lot. For the buy stop on the pound USD, I'll adjust this a little bit, be a little bit more precise. I can't go 1.0325. That's a little bit too much. 1.0320. We're happy with 1.0320 on the Euro USD. All right, so buy stop on the Euro USD 1.0320, sell stop at 1.0285. We got about 45 pip range. Dollar yen, you're not going to be trading the dollar yen. Aussie USD, this one here is a little bit tricky. It's kind of starting to move down a little bit more. I would take New Zealand USD tonight. I would go with a sell stop at 0.5590. I'm going to give this a little bit more room because we don't have a lot of range on New Zealand here. And also for the buy stop, I want it to be at 5630. All right, 5630 on the buy stop on the New Zealand USD, just at that high there this morning. And then for the sell stop, it's going to be at 0.5590, about 40 pips of range. Aussie USD, I'm not sure if I want to take Aussie USD because I just don't see the corridor of volatility, at least not even on the hourly time frame. You can see that turnaround that happened on the Aussie USD. In fact, it's looking more like an inverted head and shoulder there. Gold here, I don't think we're actually able to trade gold. We don't have that corridor of volatility. But if you're looking to go long on gold, we will try to trade this after the news, but not before the news. Dollar Canadian on the 15-minute time frame, we do have a buy stop that we can implement. I do want to have it a little bit higher because if you take a look at this one here, about 1.4370. Yeah, it's so close to 1.4375. I'll just have it at, I'll go with the buy stop at 1.4375. And the sell stop should be pretty simple. I want to have it at 1.4430. 1.4330. Okay? So 1.4375 for a buy stop, 1.4330 for the sell stop. And I believe the Swiss is prime for a breakout because we have been flat on the dollar Swiss. And this one here, the buy stop, you want to go a little bit higher on the buy stop, 91.30, right? That's your buy stop, 91.30. Your sell stop, you need to have it that lower, but it's so close to 91, right? You can go 91.10 if you want, or 91. The safer side, it'll be 91. Let's go in 91. But if you take a look at the range here, it does mean that it's actually a strong support coming in at 91 cents. We're not breaking 91 as of yet. In fact, I don't think we have broken that since early January. So 91 is actually going to be a strong level there on the dollar Swiss. But yeah, this is prime for a breakout on the dollar Swiss. I'm just not sure which way it'll go. Okay. Where to pull up the page you have open, it will be at I'm using tradingeconomics.com. So yeah, if you want to go there, you can use that. Okay. So we already talked about gold. I want to be on standby for gold. Not really looking at anything into it because I need to see what the reaction is on the price level. Because gold on bad news, it could go up. Or gold on good news, it could also still go up. And we're not able to straddle this. The market has been going up. We just don't have the corridor of volatility. So we're going to leave this alone and we'll probably trade this post news release, just like last week's NFP number. Yeah, I will update on that. Yes. It's just that I much prefer to be on the safer side because I need to look at the breakdown on the numbers here because, it is a little bit too risky in terms of gold prices because, high inflation, it could drive gold because of concern by everyone. Low inflation, it could also drive gold up because then everyone is expecting a rate cut to happen. So yeah, it's tough. It's more like a catch-22 there. All right, any minute now. Positioning on. Sorry, the numbers should be out anytime soon. Any moment now. We'll probably get a reaction on the prices first before the release, but we'll see. We'll see what happens here. Are we going to be getting it as per consensus? Are we going to get some action tonight or not? We don't know. We are not quite sure yet. We'll see. All right, numbers out. I think the number is out. We already have a buy stop and sell stop on the Euro USD. I'm just waiting for that to trigger. We got a sell stop 1.0285 and buy stop 1.0320 on gold. Oh, it looks like it shot up. So I'm just assuming the inflation is actually, and I need to close the other order. So we got buy stop triggered, sell stop on the Canadian dollar Swiss triggered. And inflation number, what is it? Core inflation is down 3.2%. Headline inflation is up as per consensus at 2.9%. Monthly rate per change on the CPI is at 0.4. And yeah, everything it's as per consensus. I don't think it's actually. I don't think it's that significant, in all honesty. We do have that drop in core inflation, but everything else is up. We got headline inflation up to 2.9%. I think a lot more focus on the core inflation there is at 3.2. Things are shooting up. I'm not sure if I got filled in right. I think we got filled in pretty badly on the pound USD. And the Euro USD was even worse. I think we got a huge slippage on the pound USD and the Euro USD. New Zealand, again, I think we got to open up really, at least on my side. This one here is not, it's not in a good pricing. we were open way beyond that. But hey, things like that could happen. News volatility, liquidity could dry up. We might not get the best price that we can. So yeah, things happen. But this is on upon USD or USD. Everything else should be going up right now. I think the mood for tonight is, I would say, the market is probably thinking, all right, oh, thank God, core inflation actually dropped down. Headline inflation doesn't overshoot. It's still below 3%. The worst for now is over, right? I can safely say that. I think if we take a look at the numbers here, even though it is as per consensus, everyone's reaction to this is, okay, we can take a breather right now. Post FOMC's rate cut last month, everyone was just guessing into what the inflation is. Is it going to be like super out of control and whatnot? It is all still under control. So I think we are looking at a relief in the market. Gold's already pushing up higher here. Are we waiting for a little bit of a fade? I don't expect a fade. So yeah, if you want to go in gold, you might think about it. The only thing that I have with gold, the only beef I have with gold is it's this. Let me show you that. This is on the daily, right? We have that bearish order block there. So if you're buying gold, make sure you are targeting 2,725 max. Okay, just keep that in mind. I think this one here can still go a little bit higher for today here. But yeah, let's go back. So we got buy on pound, we got buy on Euro USD, we got buy on New Zealand USD, we got sell on dollar CAD dollar Swiss, right? Yeah, I'll leave this one here, not too concerned. But let me explain. I think the stock market, it's probably, letting a huge sigh of relief that inflation is under control and not too concerned right now. The numbers, it's not that bad in all honesty. Take a look at the numbers here, and you can see the inflation rate is at 2.9 as per consensus. That's the consensus. From 2.7, no revision. Core inflation has dropped from 3.3 to 3.2, and the core inflation rate changes per month has dropped from 0.3 to 0.2. Although the ordinary inflation in terms of growth, it does go up to 0.4. Right now, the reason why market is taking a look at this and say, hey, everything is all right, because it is still under 3%. So we're good on inflation number. This is all right. This is not a bad news, and that could affect risk sentiment. So I don't expect negative risk sentiments, and I don't expect that to happen today or this week. I think we are out of the way for the important numbers. In fact, if the weekly unemployment claims tomorrow comes in a little bit low, a little bit lower than what the market is expecting, that could actually boost risk sentiment to the upside as well. Okay. So obviously gold is going to be the main focus here for a lot of you guys waiting for gold. Are we going to be waiting for a fade, or are we not going to be waiting for a fade? Things to do, things to look at. Let's take a look at, I'm just trying to figure out where my gold is. Okay, so this is gold on the hourly time frame. You can see the movement here. The reason why I don't really want to take that buy stop and the sell stop here, it doesn't play right with our plan, right? Because we don't have that corridor of volatility. So if you had taken a buy stop and a sell stop just now, you would have been taken out by the spread there. And logically, it would be a little bit more on the buy stop here. But if we take a look at the positioning here on the hourly time frame, just waiting for the pivots to load up. Just waiting for the pivots to load up. There we go. All right, we capped by R2 and R1 on the pivot, all right? So if you want to play it safe, for today, if you are trading this based on the hourly time frame, you basically need to see an hourly close above or below this range. Ideally, I want to see that above, but if we take a look at it from the potential on the stochastics here, can this one grind higher? Yes, I think we could. We could see that goes higher, but it needs to close above 26.90. At least on the hourly time frame, okay? So that's one way to tackle that. The other alternative is if we take a look at, don't look at this one here. I'm not quite sure how a VWAP is going to work on gold. Never tried it because It's going to be really tough measuring volatility, but so far it actually bounces off the VWAP on gold here. This is on the 3-minute time frame. What I'm looking at here right now, we might see price kind of pull back down a little bit. So we'll see what happens. But if we take a look at it on a small time frame, for example, 50 minutes, I'm just waiting for the stochastics to kind of cross up. RSI is already picking up great. So it's better to be safe than randomly taking a jab in gold prices right now, because technically it doesn't go out of the range that we have in the market for gold prices, right? So we can take a look at this one here, like the Euro USD. It spikes up, it continues to maintain the position up there. Like pound, you know, it's really up there. You're actually looking at a full body candle here on the pound USD, and it's still pushing up higher there. And we might actually surpass 1.23. If we had get an hourly close above 1.23, and I think we could actually be good on that one there. But gold, if you take a look at gold, it's not doing anything. All right. In fact, it probably causes you a little bit of a fake spike to the upside. If we had a buy order, we would be taken out up there. We'll be in negative right now. So there are reasons why we were avoiding gold, because from a technical perspective, from a trading in terms of just trading strategy that we talk about with news trading, which is a straddle strategy, there is one requirement that it needs to be in a market where it's actually consolidating or in a sideways market or accumulating, but it's not. We don't see that corridor of volatility, so we're not trading gold, and there was a reason why we're not rushing into gold. Okay, all right, looking at all the positioning here, I don't like how the prices is right now. And you know, in all honesty, if you got a good price, right, if you see that box there and it kind of just jump up, if you manage to get filled, you know, I didn't get filled right, but some of you probably get filled okay. You're looking at about 60 pips of gain here. We got filled way up there. We got dragged up, like, you know, close to about 30-40 pips. You should be in profit. I'm just not looking at that profit right now because I didn't get a good fill on this one here. But yeah, if you're in profit, I would suggest move your stop loss to break even. Get out from your trade if you can. It's already running a good 60 pips on the pound USD. On the Euro USD, I think the jump up was also about 60 pips. If I'm not wrong, I think the jump up was 60 pips. It was 58 pips. Dollar yen smashing lower here, but we are approaching support on 156. I'm not interested in trading the dollar yen at this point in time. Still a lot of concern in terms of what the Bank of Japan is, and I think there were talks today that the Ministry of Finance in Japan could intervene, and also Ueda might be hiking interest rate this month. I think a lot more analysts are looking into that. Aussie USD recovering a lot stronger here. This is pushing higher. Next stop for this one is 62.50. If you have a buy on Aussie USD, you want to be targeting 62.50. If you have a position on the Aussie USD, New Zealand USD should be pushing up higher here. We got a little bit of a, again, I didn't get a good fill. Take a look at where the fill was and where price is. It's not even there. So the spread was so big just now. It just goes up there and take out the order, but price was actually not there yet. Can this happen sometimes? Yeah, in a situation where there's a huge volatility and where liquidity dries up, we get this kind of situation plays out as well. But yeah, you know, if you take a look at this one here, all the positioning here is negative, but you should be profitable if you got fill in right. And if I say to you, you got your trade, please get out from your trade. Can we maintain this for a long positioning? I think we could. I think we could see a continued rally. But if you plan to just get in and get out quickly, do so right now. And the reason is I want to break down one by one on why I am concerned, especially on the Euro USD and the Pound USD. Number one, this is on the Euro. We might push higher, closer to R1 at 1.0380. Once it gets there on the Euro, that's where you want to get out. So on the Euro, no matter where your entry is, 1.0380 is going to be your target. Now, is that something of a concern? I think it is actually something of a concern because it's only about 30 pips away. But this is going to be the target on the Euro USD. Your stop loss should be at break even right now, but if not, then your stop loss should be here. The problem, you can see the problem here. It's starting to show something here. If I got filled in over here, right? If I got filled in over there, which is what was the original buy order, then my risk reward ratio was superb. All right, I got 1 to 2, close to 1 to 3, but I got filled a little bit too high. So hopefully you guys get filled lower than what I get filled, then your risk reward ratio will make sense. But this is on the Euro USD, right? Next thing is on the Pound USD. If you take a look at the positioning on the Pound USD, we are still being capped by 1.23. We need to overcome 1.23. Can we overcome 1.23? Hopefully today, yes. At least we have inflation number from the UK and whatever not. But the goal today, if we take a look at the weekly pivot, it is located at 1.2320. Okay, 1.2320. This is the level where we need the Pound USD to close above before we can push higher. Now, if it's able to do that on the Pound USD, then the logic here is that I want to maintain this for a swing position. We already got a trigger on the buy, so my stop loss is going to be at 1.21, right? And I'm going to turn this into a swing trade, and target wise, this is where we want to target ourselves, right? You can go for 1.2450, but I want to go a little bit higher to 1.25, okay? So I'm turning the Pound USD into a swing trade, and my stop loss is going to be 1.21. My take profit is going to be 1.25. Et voila. Okay, so this is going to be a swing trade on the Pound USD. This is the current positioning. My risk reward ratio is still superb. Okay, Euro USD, make sure it's intraday. I'm not turning this into a swing trade or anything like that. But yeah, again, depending on the positioning, we might not get a good risk reward ratio here. All right, New Zealand USD. I want to take a look at New Zealand USD first because I need to kind of find a little bit of a limiter on the New Zealand USD. We are very close to resistance 1 on the weekly, and I think this could go higher, but I am concerned with how price has not been able to push above 55.50. This is going to be the main focus tonight. We haven't seen a daily close above 55.50, sorry, 56.50 on the New Zealand USD. Okay, this is going to be your intraday target. If it fails at 56.50, get out. Okay, you want to feel safe, get out at 56.50. But if you're brave enough, once there's a daily close above 56.50, I am expecting a retracement, a correction to the previous area where it actually finds a little bit of a support, which is going to be very close to where the R2 is located. So the current positioning on the New Zealand USD is you can get out there if you want, but your stop loss is going to be this, and I much prefer to turn this into a swing trade, which is a New Zealand USD aiming for a return towards 57.50 on the daily. Okay, so we got 2 trades I'm turning into a daily, which is the Pound USD and the New Zealand USD. And dollar CAD, again, I'm not getting a good feel on dollar CAD. This is going to be really frustrating. But at the very least, on the dollar Canadian, we have this resistance trend line. So your stop loss on this one here is actually pretty clear. This is going to be our stop loss. Now, target-wise, again, we are only going to be looking at a potential push about 42.75-ish, right? Just about there. Just off the lows that we saw this week. And if we push any higher, you can see why I'm not aiming for crazy number beyond that. We are very limited in terms of what we can do on the dollar Canadian. This is still a 1-to-1 risk to reward ratio, even though I didn't get filled right. So it should have been a lot better for you guys there, okay? Dollar Swiss, I would actually clear out Dollar Swiss. I'm not too comfortable with Dollar Swiss at this point in time, especially considering the floor that we have about 91. It is a really strong floor for Dollar Swiss. So dollar Swiss, if you're profitable, good. If you're very close to your break even, good. Right now on my side, I got filled in bad, and I'm only just down negative 17 pips. I'm gonna clear out dollar Swiss. All right, so we got 4 positions remaining: dollar CAD, New Zealand USD, Pound USD, Euro USD. Pound USD and New Zealand USD are gonna be our swing trades for this week. Everything else, the Euro USD and dollar Canadian is going to be an intraday trade. As I said, any opportunity, any good profits that you see market getting a little bit weak on the legs, get out. Simple as that. All right. Is there any fade potential? Should we just keep our stop position? As I said, we just adjusted our positions here. I would just leave it as it is. Should we just keep our stop position? I would keep it. The only position I would close is the dollar Swiss. I think that would it. I will not fade the trade, but if it goes down and I get a good price, I'll probably buy back in. Simple as that. If gold on the hourly closes above 26.90, if gold on the hourly time frame closes above 26.90, could we see it push to 2700? Yes. We're looking at 2725 if it does push above 26.90. What is that range again on gold? That was someone asking if anyone got in on the euro except the two of us, hopefully. But yeah, I don't think that was a good fill on that. So yeah, if there's an hourly close above 26.90, can it go to higher? Yes, I think we can still go to 2,700, but you don't want to be targeting 2,725. Sorry, beyond 2,725. That would actually be a daily trade, right? So if you're looking at that, this is always your stop loss. It has to be that candle's low. Okay, it has to be this candle's low. No point placing it any lower than that. This is already below the Kijun Sen. Below the Tenkan Sen. Target is going to be R3 2701. So yeah, if you're asking 2700, I think it's a possibility. If he closes like this, above 2690 on the hourly time frame, all good. Bitcoin. Let's take a look at Bitcoin. Positive sentiment should be good for Bitcoin. Should, right? It has been really crappy. That's good. No problem at all. There was a discussion on Bitcoin here yesterday, and we were already looking at that push higher. I think someone was even asking if I should just aim for 99,500. And I say, why would you want to aim for 99,500? It should go up higher than that. So yeah, Bitcoin's already recovering higher here, and as I said, all right, you have to understand the context here. Can I be honest with you? A lot of traders has been holding their breath since December, right? We were away for our holidays. We're not trading. We stopped our trading, first week or second week of December. Basically that. No one and everyone just comes back. Everyone's missed the first week of January. Everyone comes back to a mess that the market has caused, the FOMC has caused. We were looking at a very bearish sentiment in the market. We're looking at everything else being so negative. It takes away the risk appetite in the market. So are we back into some risk appetite? I would say so. This is Bitcoin on the hourly time frame. We've broken through R1 like butter. And I think this is reason enough. We have broken out of R1. We have broken out of yesterday's range, right? We were stuck yesterday, basically like that. And we broke it. It's fine. We got out. Can this one speed up? If you take a look at the stochastics, there are a lot of room to go to the upside. This could overshoot. I think tonight it will be above 100,000. Is it able to maintain above 100,000? I don't know. But in the long run, where is it going to go? Because if we take a look at this one here, can we draw a resistance trend line on that one? We have one limiter left. That's 100,000. If we should and break above 100,000, you know what happens here? This trend line never existed because the rule for a trend line is it has to be tested 3 times for it to be valid. But if it breaks it, what do we have? We have a little bit more of a potential channel break. It's not a flag. It's not a flag at all. It's not a flag. I think we are beyond 20 periods. But yeah, you can take a look at this one here. We had that distribution. We are getting a new channel. We are starting a new formation. We'll probably break higher. and then we're going to get stuck in that accumulation phase before we can actually push any higher here on Bitcoin. But looking at the momentum right now, looking at all the sentiments in the market as it is, I think Bitcoin will probably hit 100,000 tonight. It's just 1,000 away. You'll probably see that in the next 2 hours or so. When the US market opens in about half an hour, 40 minutes, right? Everyone's going to look at that and say, hey, you know what? This is nuts, right? So everyone's just taking a huge breath right now that inflation is luckily still under control. And does that give enough reason for the FOMC to go crazy cutting interest rates? No, but at the very least, it doesn't cause a lot of headaches into the market because the market was concerned. Why was FOMC hesitant in terms of cutting interest rates? Because they are afraid that inflation could be driven up by Trump's tariff. So on one side, we are looking at inflation still under control. We still don't know what Trump's tariff is going to do on inflation because we don't have the final tariffs imposed. So it's very hard to calculate a lot of the stuff here, okay? But yeah, we are looking at risk appetite returning to the market, and I think that's a positive sign. Can I jump in on Pound USD on a buy? Let's take a look at the Pound USD. We might actually get a probably good, better price. We already had a buy on the Pound USD, and I think I got filled in probably worse than the current price level. In all honesty, yeah, I got filled in worse than the current price level. So if you're thinking of jumping in on the Pound USD trade, by all means go for it. Just make sure that you know where your stop loss is, because let's just do it here because I can show you where the stop loss is. So if you're jumping in on the Pound USD trade, this is done. Let me just get rid of this fib. We don't need that. And let's focus here. Let me just hide the Ichimoku. We are above Ichimoku Kinko Hill. Not really concerned. Very happy with that. We already got UK CPI numbers. Not too concerned. We got UK GDP numbers. Not really a concern at this point in time. But if you're thinking of going long, make sure you understand your risk, because your risk is going to be 93 pips. That's your risk. Okay? If you want to go long right now for an intraday trade aiming for R3, you'll probably get about a 1-to-1 risk to reward ratio. And as I said, I much prefer to turn this into a swing trade. It makes a lot more sense if I'm targeting 1.25. Okay? But it does hinges on whether or not price is able to overcome 1.23 or 1.2350, which means this is going to be the range of your potential profit taking target where price could actually fail. Why? Because if we take a look at this is basically where price is clustered. But in all honesty, if we take a look at the move here, let me get rid of this. And the reason why I'm still positive on this one here, we have a huge fair value gap that's not filled yet. So I think that's a bonus. That's huge. It's up there. All right. And where it is, about 1.24 to 1.2450. So by all means, if you take a look at the positioning here and where we're aiming for that gap to be filled, it's way up there. And does this gap has more importance? Yes, that's where it kind of was a floor before it breaks down lower. So we need to see a return back to that place. So target-wise, feel free to go 1.24. That's completely fine. If you want to go in right now, your stop loss is going to be 91 pips. That's what we can give you. Okay. Yay! See, chat. Thanks. I like hearing that, and it's always good if we get that positive feedback, right? At least I know I'm doing something right. At least I know someone is actually using it right. So yeah, thanks for that comment, and I appreciate the series of the webinars on news trading. Profitable in this strategy for news for 2 months now. That's amazing stuff, all right? And hashtag Video News Trader. I like that. Okay, cool. All right, we're about to wrap the session up. So yeah, positioning wise, everything should be as it is. No issues, no adjustments to the stops. We were not fading this. I don't think we can fade this. But yeah, the only position that I closed was dollar Swiss. Is that a good position? Is that a good logic? I think so. If you take a look at the dollar Swiss, it's not really pushing any lower that significantly. I'm a little bit concerned with the dollar Swiss, and I don't know if actually today it's actually going to close below 91 cents on dollar Swiss. So this is the only one that I actually close out from. For gold, you want to be waiting for 26.90. Any close above 26.90, that would be good. We're already above 26.90. We are at 26.91, closing 26.92 in 4 minutes time. Then yes, it will probably close above that level. You can go and target 2,700, 2,725 max on gold. Bitcoin, I'm calling it now. We are going to be looking at 100,000 today. I think the risk sentiment is just so positive. As I said, we're looking at a huge relief in the market. This is going to push higher. We're going to be looking at 100,000 on Bitcoin, at least today. Whether it's actually sustainable above that, I do not know. Okay? All right. Last minute questions before we wrap things up for tonight. This is the code again. It's non-farm 2025. So make sure you use the code. It's a good code. And yeah, as I said, if you can still use 2024, use that one first. Keep this for 2025. You know, I'm not sure if it's actually reusable multiple times. Some people tell me it's not. Some people tell me it might work. But yeah, you guys tell me. Does it work? I don't know. Okay. Anyway, last minute questions that we have. Otherwise, we're going to wrap up the session. I think we had a fantastic, productive 2025. We had a wonderful NFP day. That was all good. A very profitable night. And I think we're profitable again for tonight. And I think all is good. This is a good sign. This is a good start for 2025. Really enjoying this. Really, I'm just getting a lot of excitement here and a lot of buzz in the market. And this is what makes me continue to do this. It's been 23 years full-time trading, and I'm still trading right now. The reason for that is it's the excitement, right? I enjoy it. Whether or not we see a bad sentiment in the market or a good sentiment, doesn't matter. All I see is, as a trader, I'm looking for that move. I'm looking for that volatility. Market goes up, let's go with the market. Market goes down, let's go with the market. It's okay. The code only worked once. Okay, see, at least someone tells me, hey, it only worked once. All right, thank you. Can gold drop after 20 Jan? I don't know. We'll look at it closer. I don't really have that crazy magic ball and tell you, oh, on the 21st of January, stuff is going to happen. Stuff is going to happen. I just don't know how they're going to react because Trump is going to be inaugurated. But yeah, let's take it closer to the release. I'll be doing an outlook. The final outlook before Trump's inauguration would actually be next week, right? We will have time to post that outlook on Monday before the inauguration, because I'll be posting that Asian Monday. Right, Trump's going to get that American Monday, which is going to be Asian night. So yeah, I'll give you my thoughts on that one, final thoughts, closer to the inauguration. All right. Please send me the link to join Octa FX. Please contact the team here. I believe there's actually a link there. I think there's actually a link if you click on the description there. There's actually a link for you guys to click and open the account. Okay, Telegram channel is actually Octa's Telegram channel. I don't actually manage the Telegram channel there, at least not on the English analytics one. But yeah, you can ask the. It is actually not in English, right? The channel that I'm posting content to. But hey, you got your AI, you got your Google Translate. You just copy and paste it if you want to. But ask the team, how do I join Vito's Telegram channel? They'll be able to give you that link. Okay. Okay. All right, guys. Thanks for joining in this month. That was a good run, and more excitement in 2025. A lot of things are going to be happening. A lot of stuff again is going to be happening. So I'll see you guys next month in February. Good luck. Stay safe. Have a fantastic week ahead. Enjoy your weekend.